Can you describe your sort of investment philosophy and approach a little bit?
Sure. So, I go back to the beginning. We've been around since '87. We've been investing in a lot of funds. What that means is we have a lot of data. We know what we think makes a successful venture fund, and we've got good access to a large number of those. We know that there is persistence of performance within the venture community. So a good fund has a very good chance of being a good fund next time around. And that's from our data, but also a large bank of independent data, a lot of it actually done out of Oxford University. So there really is that sort of persistence of performance. And that's because VCs that have been successful in the past are more likely to attract the entrepreneurs. They're more likely to have the relationships with the strong entrepreneurs of the future. And then they've also got that pattern recognition in and around what could go on and become an exciting business. So, our investment philosophy is therefore very much to focus the majority of our capital on the VCs where we have a high conviction that they will achieve upper quartile performance. So strong, consistent performance. These groups tend to be pretty well established. Access to new investors is very limited. We'll build strong relationships with them. We'll often add value through our global approach and our sort of proprietary data set. But we're not foolish enough to think that past performance is the only indicator. Sometimes funds that have been strong in the past actually don't go on and perform well, and you need to understand when a good time to cut a relationship in. And that's often actually in and around succession. So a lot of the brand firms have done a brilliant job at it, and some haven't. And those that haven't actually tend to fade away. So you need to understand that as an investor. So it means, we're selectively cut, and we will selectively add new relationships. But we're not about to put together a portfolio of brand new funds, funds 1 and 2. That wouldn't make sense for us. I don't think it's a long-term successful strategy. You may get lucky, but data suggests that's unlikely to work across a portfolio of funds. So, I guess ultimately, what are we trying to do? We're trying to provide investors with a focused portfolio, investing in a small number of core managers. So our philosophy is really about that. What can we give investors that they can't easily do, and it will give them good, consistent performance? And it's not about trying to pick the best VC fund in any one vintage, because that's a bit of a game of chance. So it's more about that long-term, consistent performance. And you've got to get that to give investors returns that are worth having in the VC market. If you end up investing in a lot of Q2, Q3 funds, you end up with returns that you could quite easily get elsewhere. So you've got to have, our belief, you've got to have that more focused approach on people that do well.
And in terms of going forward, are there any new sort of sectors or themes or opportunities that you think are particularly interesting?
I guess if you think about what VCs do, they'll tend to invest in themes that they see as the future. The best VCs do that early, and that's where they're then able to generate the return. So it can take a long time for a theme to become mainstream. And I think it's just sort of worth bearing that in mind. So things like SaaS or cloud, 10 or 15 years ago, hardly existed. Now they're pretty ubiquitous. And that means that the existing companies, the established groups out there, either have to adapt or die. And if you think about it again from the public's perception of a lot of companies, a lot of the companies that are doing cloud and SaaS are seen as new companies because people haven't heard of them previously. But actually, they've been around a long time. It's important to realize that the VCs are investing in themes that take a while to develop. So if you look at cloud security, for example, so you would look at that today and say, that's an obvious play. Of course we should be investing in that. But the successful companies in that were started more than 10 years ago. So you could look at Okta or Zscaler. These are companies that are 25 billion and 15 or so billion respectively market cap companies. Most people haven't heard of them, but they have been around a long time building into that theme. I guess COVID has accelerated a lot of the themes. So again, things we've been investing in for a long time have suddenly accelerated. You've got online sales in, I mean, just take the UK, for example. I think we were growing at 11%, 12% a year. I think March to June, they grew 324%. Yeah, which is phenomenal growth because of what we're all doing. We're all sat at home buying things online because we're not going out. What that leads to is then the payment companies, some private, some public, suddenly picking up huge growth. So, one of the payment companies I heard in terms of their growth plans hit 7 years of growth in 3 months.
Wow.
So, yeah, phenomenal sorts of stuff. But it's because the VCs it's coming through because of the pandemic. But it was themes that were backed a while ago as the real sort of markets of the future. Look at Zoom. Here's a company that's gone from 10 million users to 200 million users in no time at all, in a way that probably only a technology company can scale up. I just don't think other companies, other sectors could do that kind of scaling as rapidly and with as few problems. I mean, it had a few problems, but think it could have gone horribly wrong, and it didn't because the technology was sound, and it was just a case of how do you scale it up. So that's kind of a long way of getting to an answer to your question, which is where do we think things are going? And it's our belief that anything that can be connected, automated, or digitized will be. We're still really quite early on in the technology transformation that we have been seeing. Every company is going to be a technology company. What it's going to need is smart entrepreneurial tech talent to spot the pain points for businesses across the world and help to solve them. So we're seeing it play out with companies in and around things like robotic process automation. So we're in a company called UiPath that started actually in Romania, now seen as an American company, but it was a European company to start with. We're seeing it in and around the intersection of AI and life sciences. So there's a company called Carius there that's doing amazing things in and around that sector. Distributed enterprises. So, how we're all working now. That actually could be the way companies are set up. I mean, some companies are already set up like that. That's how they start. And they build as a distributed enterprise. So a company like Figma is really playing into that. But like I say, we're firmly of the belief that over time, every company is going to need a pretty high level of technology. And that we're pretty early in that transformation. So that's kind of what keeps us excited about the opportunities for investing in tech.